Well, g'day the traders right around the world. Thanks a lot for joining me in this weekend market update. I wanted to take the time in this particular video to allude you to how far away the current market price is from the 10, the 20, and the 50 exponential moving average, and go back in time, have a look at what the market has done when we've been so far away from these three key levels of support moving forward. This market this week, or the market over the past week, has continued to rise like a helium balloon. A lot of people are becoming overly complacent on the bullish side. I want to take the time to show you the risk of what the market can do over the next coming weeks trading moving forward. I'd hate to see a lot of people go out there and start placing a lot of bullish trades and then to set themselves up for what we call whipsaw trades, which take place when the market retraces and individual stocks take sudden moves to the downside. That is what I am expecting as I have just recorded this week's pro analysis class. A lot of trades are showing great structure. I am very excited to see how this week plays out. There are an absolute plethora of trades which we have just walked through. To name a few, we have got Tesla, which looks amazing. We have Netflix setting up what we call a Bollinger Band squeeze. We can see Google on the precipice of breaking to the downside. We have a very, very nice earnings play on Disney. We can see Caterpillar still forming that bearish reversal type of pattern at that key level of macro support. Amazon, a very bidirectional trade, and Apple is setting up a very, very nice rectangular stair-step pattern. On top of this, I have already addressed Priceline, still that bearish trade to the downside, $1,077.60 trading down to about $1,030. This is perfectly poised to make a very, very quick and sudden move to the downside if in fact we see the three US markets retrace a little bit in a controlled manner to the downside and really moving back into the 10, the 20, and the 50 exponential moving average. So what I'm going to do is just simply show you how far away we are just using a simple drawing tool, which I like to use sometimes. This is what we call a rectangular tool. It's just showing us how far away price is at the current market price from that 10 exponential moving average. What I'm simply going to do right now, ladies and gentlemen, is drag this, go back in time, and find out what the market has done in the past and how to expect the market to work moving forward. I mean, I'm struggling already to go back in time just to see a time in recent history when the market has pulled away this far from the exponential moving averages. Right now, I'm going back to, if I zoom in on the detail, really to April 2014. I'm trying to bring this chart to the right. I want to hope anyway that it works with me. It's just taking a little bit of time. I'm going to bring up the exponential moving averages once more. But you can see right here, we're pulling away from the exponential moving averages. It isn't even as far away as what it is right now before you get that quick pull back to the next area of support. That's not a very good example. I'm going to continue this discussion. Take a look at this. Going back to December 2013, this is the first time, or the most recent time, where the market has traded so far away from the 10 exponential moving average. What occurred at this location? We saw a slowdown in the market. We saw the market move sideways, ultimately before we got the retracement, which we are all expecting. Let's go back and let's continue this exercise. Again, look what I'm trying to do. I'm trying to find a time where price was trading this far away from the 10 exponential moving average. Look at this example going back to September 2013. So this is over 1 year ago. This is the second example of current market price action taking place. What happens? We rally away so far away from the 10 that we get a very, very quick pullback back down at least to the 10, the 20, and the 50 exponential moving average. Let me show you this in action one more time. I'm going back. During this whole period here, July and August, we didn't even pull away as far as what we did before we got that retracement in the overall market. Moving back, moving back, moving back. Now, going back to April 2013, let me bring this over one more time. Have a look at this. This is half the distance away from the 10 before we started to see the market retrace. Going back to April and March 2013. Let me bring this back one more time. Have a look at this. I'm going to finish with this particular occurrence of this same sort of routine pattern. You can see again the market breaking away from the 10 exponential moving average. What happens? We see a week's retrace in price for the market to retrace back into the 10 and 20 exponential moving average before we have again the stamina to rally higher. Why am I saying this to you, and why am I doing this in a weekend market update? The reason why is that when I bring up the exponential moving averages, we are so far away from the 10, the 20, and the 50 that it is just lunacy to think that this market can continue higher in the same trajectory. I mean, look at the angle of this. If I drew a watch, 1, 2, and 3, the angle of this elevation, the angle of this bullish movement is sitting at 1 p.m. or 1 a.m., whatever you want to call it. It's sitting right on the 1. This move that we are experiencing in the US markets, it's unsustainable. You can't think that price action like this is going to continue for too much longer. All right. I'm not sitting here saying that this bullish trend isn't going to take off and move higher. I do believe at the moment this market is healthy. It is moving very, very nicely. But you're absolutely foolish if you think that it is uncommon to see a market retrace back into key areas of support, either in a stair-step pattern, in a bullish flag, or in some form of a wedge, before price can contain or at least move in the same velocity in which it is currently moving in. The reason why I'm putting this market update out is because a lot of these top 13 stocks, along with Priceline this week, look incredibly bearish moving forward. It looks as if they are going to capitalize on the bearish movement, which could in fact come into the market this week, as at Monday the 10th of November 2014. I'm putting this warning out there 3 days ahead of time, just so people can see this and of course see how price action moves for the coming week. I think a lot of traders out there around the world are going to be taken off guard with what is just around the corner with all three of the US markets. So please take this video to heart. Understand what I'm trying to say to you right now. Yes, the bullish trend looks healthy, but we are so far away from any level of support. This trend is unsustainable. It needs time to rest. It needs time to retrace. It needs time to consolidate. The trades are setting up. I'm telling you right now, the trades in our top 13 list are setting up to capitalize on that. I don't want anyone who watches this video to be taken off guard on what could happen and what could very well eventuate this Monday, Tuesday, and Wednesday to start the trading week off. All the best, ladies and gentlemen. I'll see you all over the weekend in that pro analysis class. Goodbye.